Hello and welcome to Insight. I'm Natasha Jabhaskar. The sharp dive in Chinese stocks this week sent a sudden chill through markets around the world, from New York to Mumbai, falling 4 days in a row. China's main stock index, the Shanghai Composite, has plummeted below the 3,000 threshold. This represents a huge loss of money for the investors involved. But it's worth remembering that the stock market remains relatively peripheral to the wider Chinese economy. Indeed, China's Black Monday is more a product of the wider economic concerns the country faces than it will be a trigger for any kind of economic collapse. However, amid the global economic gloom triggered by a slowing Chinese economy, most economists maintained that India's growth prospects were brighter than those of other emerging markets. In today's edition, I'm asking if India's economy is in a better shape than China. And joining me on the program today, very esteemed guest, with me from Indian Institute of Foreign Trade, Rakesh, Mohan, Joshi. Thank you very much, sir, for joining us in this program. Also with me, well-known economic journalist Shantanu Gohare. Thank you very much, sir, for joining us in this program. With me, visiting fellow at Research and Information Systems, RIS, Professor N. Chandra Mohan. Thank you very much, sir, for joining us in this program. And senior economist P. Pulara. Thank you very much, sir, for joining us in this program. So in the first segment, let's try and understand the very impact of this crash on China and Chinese economy. Coming straight to you, Professor Joshi, is the Chinese economy witnessing a transition, and especially after this crash, which many are calling a bloody Monday, a Black Monday? Is this largely what you call from a high growth economy, China is now witnessing a transition to a comparatively mature economy?
China, I think the phase is changing down, but if you see, the China has traditionally performed much better. If you look into the historical aspect, that you understand that, prior to 1991, the India per capita by 90, India per capita GDP was greater than China. Right. The problem started only after that, wherein now the China is 5 times richer than India. So China has consistently performed better. Chinese economy, their total GDP is 5 times more than India. So that way the size of that economy has gone up. If you see even the competitiveness index, I think there is no need to be so much scared of, like you see the media report. Last year in 2014, the present competitiveness, global competitiveness report, and the last year's competitiveness report, India has fallen 10 ranks below. From 60, India's rank is 71. Right. If you see 2007, 6-7, India's rank was much higher than that of China. From 43rd rank, we have come to 71 rank, wherein China during the same period has come from 54 rank to 28 rank. Okay. So fundamentals as far as the global competitiveness is concerned, China has been a stronger, traditional.
It's a highly resilient economy, but there are many who also question in terms of when we're talking about fundamentals and the bigger macroeconomic indicators. How do you really assess the Chinese
yes, you are right.
economy?
Now, if you see, China's share in the export market, the world export market is about 12.5%. Right. So China's share, and Chinese economy that way is more, exposed to the export market. China in many categories dominate the world markets. China dominates Indian markets as well. Indian market so much so that small things like penicillin.
We have outsourced our manufacturing.
We have outsourced manufacturing. We have outsourced to the extent that many manufactured products, mobile phones, laptops, 90 to 98% we are importing from China.
But will you really agree when economists and experts say that this stock market crash is largely peripheral to the overall Chinese economy and doesn't really have a direct impact? Will you agree with that statement?
No, direct impact, one thing is, the China devaluated its currency. Right. Chinese products will become much cheaper, much cheaper in the international market. So China is now targeting international markets more aggressively. They already have got 12.5% share. Now this would have a devastating impact on the markets elsewhere which are manufacturing, which the markets are already facing that. But I think in the long term, I think the impact is to be, very carefully computed, and India need to have a very careful strategy. So I think don't go so much on these stock markets. Okay. They are more, there is a lot of sentiments also involved. But go by the basic structural fundamentals. And the structural fundamentals, what I say is the competitiveness of, global competitiveness of China in most sectors is continuously increasing. And this has been a well thought of a strategy of China to devalue their currency. By devaluating their currency, Chinese goods which have already flooded the global markets, or they are having a kind of a monopoly in those global markets. It will increase. And today you read any of the US newspapers, all newspapers today, they are saying that by way of the free economy, the government of United States of America destroys the jobs, and the factories are closing up day after day, and this devaluation of this will close the factories not only United States,
but at this juncture, Professor Joshi, you know, if you have to compare US, Europe and China, who do you think is really better placed in comparison in terms of economy? If you have to compare,
US is certainly now.
You know, in terms of the market crash and the way they have really tackled the challenge.
No, I think India is the best placed.
India is the best.
India is the best place. If you talk of the market, the market crash, out of $66 trillion of the market capitalization of United States of America is almost $22 trillion. But if you talk of India, our market capitalization in the global market is only 1.4. So the impact on the China for this crash was 41%. India, the impact is much lower.
Right. So our Finance Minister Arun Jaitley has said that India can replace China as a driver of world economy. So is this really an opportune moment for India? Can we say it is advantage India this time? Coming back to you, Professor Joshi, is this advantage India moment for, in terms of India really replacing China as a driver of world economy, as Finance Minister has said?
No, what Finance Minister has said is easier said than done. So that could be a, might have some political overtone. But if you see the fundamentals of India are strong, but at the same time, with the fundamentals strong, if you remember 8-9, when our GDP growth was 6.57, it was going on, but our fundamentals were not strong, so we could not maintain that GDP. True. Now, if you see the fundamentals, especially in terms of the infrastructure and the institutional competitiveness, unless the right steps are being taken, I think it's very difficult to replace. But the fundamentals are very strong. What he says is, one is, the India's domestic consumption is 70% of the GDP, unlike that of China, which has got 49%. So, but despite, I think there is other part of it. Say 49% for an economy of 10 trillion. Our is an economy of only 2 trillion. So, there is a difference in this the size of that economy. But one is, the India, whatever we produce, we can consume domestically. India, if the capacity is increased, we can do this. And more importantly is, we need to be competitive in the domestic market, so that our reliance on the import is not there. But if you look into, because of China's devaluation of the currency, because if you see India's import deficit about 140 billion US dollars. So we are importing more than what we are exporting, and India's trade deficit with China is more. So this trade deficit, when the Chinese currency devaluates, it will help us. And the God has been very favorable to us, more than the policy makers.
And and the big debate between the growth and the inflation figures, fiscal versus monetary. But do you see the present government in agreement with the central bank, unlike the previous one, where we've always seen fiscal and the monetary policy going in two different directions, and the growth versus inflation debate picking up? Are we very much in a controlled situation today?
No, I think you see there are problems between the government and the central bank, but you also need to look into the argument of the central bank, which I think after this slowdown or the stocks fall, people are appreciating especially the decision of the central bank also. So I think
of deciding not to cut rate,
not the cut rate, because the priority of the central government is two. One is to to curb the inflation, to curb the inflationary pressures, and then I think to isolate us from the impact. If you see, the whole impact you have seen depends on your global integration. Now, wherein America has got, there is a fall in the stock of 21%. India, it is only 3.7%. So we are almost untouched with this global, stock crisis. You see another thing in terms of our trade integration with the world also. The India's share in the world market is, especially the export market, is 1.8, 1.9. Where China, it has got 12.5 or even more now. So therefore, China is getting directly impacted. India, even if you devaluate the currency also, India is not going to benefit the way that China is getting benefited.
Okay.
So India, if devalued the currency, our import is more, and import is more, especially you talk of this, the say oil. Oil is very important. So we devaluate the currency, it is going to be double-edged sword. So I am not very comfortable.
You're not very comfortable with that.
I think
Right, so what happens to our big economic reforms agenda of the government? Coming back to you, Professor Joshi, in terms of economic reforms, we have seen, from the time Modi government came into power, the whole talk was around economic reforms. But we've also seen how rating agencies have said that there is a policy stagnation. Is this primarily because the government has been unsuccessful in building political consensus, or is this also because there are other external situations involved?
Externally is one, but more importantly is, how internally we are structured and, we are prepared for this. One thing I think, let's comment to the Modi government for one thing, that image of India in the international markets or international segment has certainly been improved.
Right.
There is certainly a very positive sentiments among the rating agencies, politicians, academicians, economists across the world, that India is on a path to internationalize, and India is emerging as a power. So this is when you talk about the sentiment part of the market.
Right.
When you come to the reality, very recently our Prime Minister visited UAE. If you see, we talk of FDI. FDI is considered to be an important part of development, economic development of any economy. If you see, we talk two things of the India in foreign investment in India. One thing is India's outward investment is more than the India's inward investment.
That's right.
It means the people who are already in India are more comfortable in putting their resources outside than in India. Second, if you see, the Prime Minister recently visited UAE. We want UAE to invest. India's FDI in UAE is 6 times than UAE's investment in India. It means the UAE's, the basic parameters are better. Now, if you analyze the UAE's basic parameters in terms of the global competitiveness over the past 6 years, from 2007-8, when UAE was at the 32nd position, now UAE is the 12th position.
So that technically
UAE
means, how do you actually create a right environment for
right
investment?
environment.
So that means that our investors are more comfortable investing in
More
UAE
comfortable.
and other nations.
And the same thing is foreign investment have to be comfortable. You are aware that we discussed a lot about FDI and retail.
Right.
There was a lot of raucous in the parliament. That time the opposition party, FDI retail when it was permitted, why investment have not come.
Right.
It is not the parliament. It is basically the regulatory and the implementing mechanism in this country. So in marketing you need the whole package of those things. You need to understand there is a right infrastructure, there is a right policy, there are the bureaucrats wherein your papers get clear, then only investment will come.
Right.
But the marketing part has been very well, and I highly commend this government, but I think the government has to take measures so that this marketing also translates into the real investment.
And how do you also translate this sentiment, the positive
Absolutely.
sentiment, into good investments coming in, and also the investments actually, apart from being seen on paper, also seen on ground?
You are very right. If these are not translated, the sentiments will not remain for a longer period of time.
Professor Joshi, overall, Indian economy in a very good shape against the Chinese economy. How do you see the challenges for the Indian economy in days to come?
Our fundamentals are certainly strong. The biggest challenge in India is, one is the infrastructure. If you improve the infrastructure and the other regulatory and the implementation framework, your competitiveness in the international market already improves.
Right.
Now today, because all countries are getting more and more integrated with the global forces, economic, financial and market forces, there is no shortcut to have to improve our infrastructure. Infrastructure problem remains. You talk of a road, you talk of a rail, you talk of the ship, that problem. Now if you see that we are progressing, but kindly benchmark those progress which the other countries are doing. If you benchmark those progress which the other countries are doing, small countries like Azerbaijan has performed much better than India.
Yes.
Can you imagine? So small countries are having, so unless these indexes are or the fundamentals are strong, there is going to be problem in almost in case of getting investment, in terms of manufacturing. You talk of the GDP data 7.58. What does it mean? The GDP is divided by the total population per capita, or the total. If you see these GDP data, our the production in terms of the manufacturing sector, it is either stable or going down. Manufacturing, if you go to specific sectors, you know, especially in terms of the electronics, the mobile phones, computers, laptops, it is going down.
Going down.
It is going down. If it is going down, the customer income is increasing. So income is increasing. You are taking, credit that our income
Right.
is
So you're saying
income is increasing, consumption is increasing. Your import dependence is increasing. Your import dependence is increasing. You are putting yourself in a trap
Right.
to be perpetually having a trade deficit.
Right. So